We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Dave Bradley, founder of the world's first Bitcoin store, co-founder of Bull Bitcoin, sits on the board of Bitcoin Well, and holds the title of the strongest and best-looking Bitcoin entrepreneur in Canada. Dave, thanks for joining me today.
Thanks for having me.
So, Dave, I thought we could kind of have a discussion about this intersection between gold and Bitcoin. You know, I know much of our audience understands the idea of sound money. And after having a discussion with you a couple of weeks back, I thought it would be useful to chat about this a little bit more, about where some of these intersections lie between these two asset classes. You know, I always try to challenge the audience of the show to consider new ideas. So maybe as we, have a rational discussion about where some of these similarities lie, that can help, bring some people around to different ideas and different ways of looking at the world.
Yeah, absolutely. And I want to start briefly as well, just mentioning why I think this conversation is important and why now is a good time for this conversation. You and I met at the Sean Newman Cornerstone event, which was an awesome event in Lloydminster, full of just like a whole bunch of different like freedom related topics, basically. And I'm seeing like a huge groundswell of these kind of freedom events, like all around Alberta, but even broader around the world. We're starting to see a lot more grassroots freedom communities sort of popping up. And it's very natural that like a lot of the core of these communities are gold bugs. And that's because the gold bugs are the people who have identified the problems that these communities are springing up to fight. Mm-hmm. And the gold bugs are the ones who've been talking about this for a long time. We're essentially talking about the debasement of our money and how the ability to print money has led to a form of communism that has really pervaded the Western world these days. And that's the big problem we're facing right now, is that other people can spend the resources that we create. Mm-hmm. And gold, as the world's most successful money and the money with the longest history of being hard money, is a great solution to that. It's moving away from the gold standard that really allowed sort of these attacks on our freedom to take place in the form of money printing in the first place. So I think right now, because the globalists, the communists, whatever you want to call them, have kind of overplayed their hand a little bit, I think, with COVID and a bunch of other nonsense that they've got going on in the world, and that has really woken up a lot more people. Now I think is like the perfect time to be having this conversation about not just about like gold and Bitcoin, but about what money is. Mm-hmm. Because you really need to understand what money is supposed to do to be able to understand how it's failing us and what the consequences of that failure are.
Mm-hmm. Dave, I've heard you say that you don't really like the term money. So what do you think is a more appropriate term or way to speak about these tools, really?
Yeah. Well, I like the term money, but I don't always look at gold, for example, as money. And I think where it's actually important, that it is a good term, but I think what it's important to do is to differentiate between money and investments. And there's, because of this debasement that we're talking about, we've started to see a lot of things that should be capital investments start to take on the characteristics of money. And, that's very, very evident with real estate, collectibles, really anything that's a rare hard asset has started to be used as a store of value at some point. And I think that the different concepts of money and investments, or rather like savings versus investment, really get muddled these days. And I don't think people are looking at those things in separate categories, and there's this concept in the markets of risk-adjusted return, which is basically like, let's compare the return that we expect to the return that we would have expected if we made the lowest risk choice, which is usually like treasury bills. And, whether or not that's actually the lowest risk choice, that concept should actually be relating back to money, right? Holding your cash, holding the money that represents the value that you've created with your time should be the baseline. And then anything that is going to earn you a yield or appreciate versus that money is something that you should be able to consider an investment. But those two things are very different.
Mm-hmm. It's interesting to, kind of hit on this topic. As we think about, let's say, the history of the greater cryptoverse, which I want to get into with you, but standing back from it, you can kind of see how risky a lot of this space was. When we saw the collapses of some of these big exchanges like Mt. Gox or FTX, right? A lot of that, I think, was driven by this acceptance of risk and drove a lot of people up the risk ladder because of this debasement. Like, how do you see let's say, the central banks really driving that behavior? Do you agree with that?
Yeah, 100%. So Bitcoin like you mentioned, I'm on the board of. We were for a long time doing sort of like in-person or Zoom consultations for people who are looking to get into Bitcoin. And a lot of the people who wanted those consultations were sort of older, tended to be a very rural crowd. The people who are not as comfortable just like figuring it out from a YouTube video. Mm-hmm. And it was great to see a flood of that demographic come in. But unfortunately, that demographic is also the demographic that gets really targeted for all the scams that we see in the world, the CRA scams, all this stuff. And Bitcoin is a common place that the scammers will take those people. So they'll have some kind of an investment thing or some romance scam or some reason that this person needs to use their money to buy Bitcoin and then send it to the scammer. Mm-hmm. And we went through quite a bit of work to sort of weed out the scam victims from the legitimate buyers of Bitcoin. And in doing so, we caught a bunch of the scam victims before they lost their money. But a very common thread, like you were talking about, is that the current state of the world and the debasement of money has necessarily driven people to a point where their risk tolerance is going up. Mm-hmm. And so, if we wanted to talk about like risk adjusted return, like really, if you throw your money into an index fund, you might match inflation. Like that's kind of like the baseline for just like treading water at this point, right? And so if you want to actually have your money earn you a return or appreciate relative to your purchasing power over inflation, you're going to need to take just greater and greater risks these days. And so when we see these seniors coming in and, maybe they've got like $600,000 saved up for their retirement and they're 65 years old. And that seemed like quite a bit of money 5 years ago even. And now at that age, people are starting to be confronted with the idea that maybe this nest egg that I've built up isn't going to be enough, because they can see that their money buys them much less at the grocery store than it did even 3 years ago. And so when people started to feel that pain, they started to take bigger risks. And that has led to everything from people being more likely to buy into investment scams, as well as Bitcoin and everything else. And because Bitcoin's been a new asset, it has been viewed as this like high risk choice, right? And it's extremely volatile. So it's, in the short term, there's no way to look at it other than being a high risk asset. It's not a good place to keep money that you need soon, because it might, like, if it went up or down 20% next week, it wouldn't be that surprising, right? And so I think that drew in a large group of these people who are now newly looking for, higher risk investments to try to outcompete inflation. And those who chose Bitcoin, I would say correctly, have been rewarded in terms of the price appreciation. Now, at the same time, this whole sort of like cottage industry of attempts to recapture that or to be like the next Bitcoin has sprung up around the so-called like cryptocurrency industry. And the reality of all of those things is that they all lie somewhere between a bad idea and an outright fraud. And there's a lot of debate about what's good about one or the other, but when it comes down to it, the big problem is that there's someone in charge of all of them. Mm-hmm. And so, they have a literal conference call with the founders of Ethereum to determine what the supply of Ethereum will be. And that really is no different than the central bankers. And so instead of having ivory tower central bankers decide your money supply, you have basement nerd central bankers decide your money supply. And maybe that's better, but it's still just another trusted group managing the money supply. And so all of those things fall well short of what Bitcoin actually accomplishes, which is a form of money where no one is in charge.
So how is it that, with the advent of what's the current count of all of these other altcoins? It's got to be, well over 10, 15,000 at this point, right?
Yeah. I mean, I remember getting into the tens of thousands that were even listed on the listing sites back in 2017 or so. These days it's much, much higher because there's this entire sort of DeFi ecosystem where anyone can issue their own assets with relative ease. And so it's got to be in the millions. Where those things capture value, I would say that probably the vast majority of the coins that have ever been issued have probably never really achieved any significant value at all. And the difference between the ones that have achieved value and the ones that have not achieved value, and when I say value, I should replace that with price, because these things do not have any value. The ones that have achieved a significant market cap because of the appreciation of the price are the ones with the good marketing departments. And that's pretty much just the entire correlation. And so it's, at first glance, it looks like these things are competing with Bitcoin, but they're not really competing with Bitcoin at all. It's like AOL competing with the internet.
Yeah.
Right. It's a company competing with a protocol.
Right. So Dave, you've been involved in this space for quite a long time. What first drew you to it? And share with us some of your war stories, like spending, I think it was something like 120 Bitcoins on office furniture or something like that.
Yeah. Yeah. So I got into Bitcoin in 2010. I was right at the point where you could first mine Bitcoin with a graphics card, like a GPU for gaming. Mm-hmm. And I was looking up GPUs to get a gaming card and found that somebody was talking about Bitcoin in there and was like, hey, you can mine this new thing with these. And I did the thing that almost everyone does when they hear about Bitcoin is you write it off and then you come back to it later when you hear about it again. And when I came back to it again, was when it hit $1. And I was kind of like, oh, that was like a light bulb moment. It was like, if these are worth more than regular dollars, this could be a big thing. And it didn't I had no idea what I was talking about. I had no idea. There was no, there wasn't a wealth of information about Bitcoin as hard money back then. Mm-hmm. A lot of people were looking at it as more like a competitor to PayPal rather than a competitor to the dollar. And so I, like most people, looked at it as like a quick way to make a buck. And I started mining Bitcoin in my basement with my graphics cards and selling them on a website that called Local Bitcoins. And then eventually I got to the point where I was like, this is, I was meeting like 5 or 6 people a day at Tim Hortons with cash, and they probably thought I was a drug dealer. So I was like, I should make this a real business. And then, we opened the store in 2013. And I cashed in 120 Bitcoins to buy the furniture to open the store. So, it's I only have one piece left. It's like a desk pedestal, and I guess it's my $10 million desk pedestal now. All of us who were in Bitcoin back then, all have horror stories like this. And it's funny because, you always, I run into people that want to talk about Bitcoin all the time. And the very ubiquitous story that I hear all the time is, I could have bought Bitcoin at this price, blank, blank, blank. And it's like, yeah, but you would have sold.
Yeah, that's fair. If you saw something go up, appreciate that much over that short of time, I think it would be difficult for anybody to be able to have had the foresight to see where it did go and kind of where it has gone, even with the advent of the ETFs and all of those pieces in this timeline that have happened.
Yeah, and it's funny too because so I do a lot of speaking about like running Bitcoin businesses because I've run a lot for a while now, and when I look back, I would have way more wealth if I had never run a Bitcoin business. If I had gone and gotten like a head down 9 to 5 job and just put as much money as possible into Bitcoin rather than spending my Bitcoin to build businesses, to build the ecosystem. And it, I wouldn't change those choices because the sort of knowledge and skills that I got in return for that over the last like 14 years, I guess, are worth much more than the money. But but it is interesting and I think that's a fairly common experience among those of us who've been in the industry for a long time, is that like, we were treating Bitcoin like money, and we should have been treating it, especially back then, just as a pure savings tool, because it was at its best as a store of value back then. And it's great that we like bootstrapped an entire industry essentially out of this, but I'd rather have the $10 million than the desk pedestal.
Yeah, that's absolutely fair. Dave, as we think about this, like, let's say Genesis, as you came through this ecosystem with all of the ups and downs of Bitcoin over the years, again, going back to this, some of the highs and then the collapses, like the collapse of Mt. Gox and China banning Bitcoin, followed by another high, and then have FTX blow up. Were there times that you ever felt that you were in the wrong spot?
Oh, that's a good question. So I was the first one that you're mentioning with the empty Gox and the China bans Bitcoin. I was probably in the unique position of having paid the most of anyone in the world for Bitcoin for a long time, because in Canada we had around that time we had a premium on Bitcoin versus the US dollar, because we had a lot more demand per capita in Canada, and so it was up to around 10%. To buy Bitcoin in Canada versus the US. And it was very, when the market was hot like that, it was very slow to send international wires to try to arbitrage this. And so, yeah, it was a significant premium. And I made a pretty good size buy personally. And it was about 10 minutes later, trying to ban Bitcoin. And that was like the entire top of the highest market in the world. And it didn't come back to that price. This was 2013. It didn't come back to that price until 2017. So for 4 years, but I still have those coins, and they feel like a pretty good buy now at like 1,400 Canadian. So like I've had the conviction to stay in for that long, I guess. And I think some of those early choices where I spent Bitcoins and then saw the price go up so massively, it's that pain of like, the potential gains that were missed that has kind of galvanized my my feelings about the rest of my Bitcoin holdings. And like, there's very few things that I would spend the majority of my Bitcoin stack on at this point.
Mm-hmm. So, considering those lessons learned, this is something I always ask, people involved in, let's say, building a gold portfolio or a minor portfolio. How do you think about when would be a time for you to cash some of that in or to rebalance that portfolio?
So I think that's the idea of rebalancing is the part that I don't buy into. I'm not balanced, my portfolio, you could say. I have some public company stock in relatively small amounts, and then I have Bitcoin, and I have a very small amount of cash, and that's and I have a little bit of gold, but that's kind of the that's kind of where I've sat for the last, I guess it's been about 11 years since I've moved off that position, and it keeps rewarding me, and so I don't think I'm going to rebalance, so to speak, unless there comes a time when I see an asset that I don't view as just a speculative gamble. And almost anything that you can invest in these days, I think, is in some way a speculative gamble. And part of the reason for that is because the debasement of our currency has really perverted our incentive systems. Mm-hmm. So when you look at public markets, when you look at the entirety of like capital markets, mm-hmm. It's all sort of predicated on the idea that every funding round will be followed up by another larger funding round at a time when money is cheaper, and you will be going after a larger and dumber pool of money. And that's not value, right? Like the idea that hopefully we can sell this to somebody who understands this less than us in the future is not what creates value in the world, right? Running a business that makes more money than it spends should be like the fundamental driving force in our economy. That's what every business should be trying to do, mm-hmm. right? And when we deploy capital, basically when we make a choice to do anything other than sit in the best form of money. So if I want to invest instead of saving, that's what I want to see is an asset or a business that fundamentally creates more value than is put in. Mm-hmm. And because those incentive systems are so twisted, there are very few of those opportunities. And then on top of that, property rights are eroding. And so a lot of the different things that you could buy, I don't have a very high trust level in property rights in Canada at all. I think if you buy a house, the chances that the government takes the house from you are very high, and that chance will go up. And this is not like they're telling us this, right? Like you'll own nothing and you'll be happy. They want all of the assets. They're going to print money and attempt to buy everything with the printed money. And what they can't buy, they're going to attempt to twist into some form of perverse incentives wherein, the asset owners really have no choice except to surrender their assets to the state, the communists, mm-hmm. so to speak. And so for me, Bitcoin is a way to defund that entire problem. It's a way to keep my own value isolated from their ability to print money, and therefore steal my value. And it's a way to have a superior form of property rights that are much more difficult for the government to seize.
Mm-hmm. So what do you think that Bitcoin does better than gold, Dave?
Yeah, so I would start with what gold does really well first, I think, and why it's been the most dominant form of money really in the history of the world, right? And mm-hmm. the main reason for that is because it's very hard to produce. It's scarce and predictably scarce. And it does a bunch of other things that are great in terms of being money. It's very relatively easy to verify. It's certainly possible to verify. It's fungible. It is durable, and it is pretty easy to divide. Like it's possible to divide. So it fulfilled most of the needs of what we needed to be money for most of human history, until it ran into its main limitations, which is its ability to be transported at scale. And once the world's economy started to explode and turn into the modern economy that we have now, gold was just not a good enough medium of exchange. It wasn't a good way to transact with anyone. You're not going to be shaving off little slices of gold. And so the idea
at the everyday level.
Yeah, exactly. And so the idea of fiat certificates, IOUs for the gold, pops up and starts to fulfill those needs much more accurately, right? You can create fiat notes backed by gold that are much more divisible, much easier to use. And you've now instituted this form of trust. You no longer need the verification. And on the day-to-day basis, those fiat notes became a better form of money than gold. And they were a better form of money than gold for about one day, until the person who was in charge of issuing those notes realized that they can issue more notes than they have gold. And that's kind of a universal thing, is that if you give someone the ability to print the money that you're going to recognize and use, they will print the money. And we all would. It's a natural, rational choice. And so that opened the door for this attack on gold, this attack on our money. As soon as you started to debase the notes, you got to the point where it was like, do we really need the gold in the first place? Right? You're starting the roots of fiat currency, and fiat means by decree. So in the first place, it's the holder of the gold saying, I decree that I will redeem this for gold. And then that decree over time, with the movement away from the gold standard, moved to just, you will accept this because we say so. And this is not backed by anything. This is backed by our decree alone. And so that limitation of gold's ability to be a modern transactive medium of exchange opened the door to this debasement. And Bitcoin has a lot of the same characteristics of gold. Most of them are just like a little bit better. So it is easier to verify. It's digitally verified by a client connected to a Bitcoin node. You can verify not only your own transactions, but you can verify the entire state of the Bitcoin network, and you can tell exactly how many Bitcoins there are at any given time, and anyone can do that. It is much easier to move, obviously, than gold. In high quantities, Bitcoin doesn't care about borders. Bitcoin can move anywhere in the world at any amount of money virtually instantly, and it is the most secure and final settlement that any form of money we have in the world right now. So Bitcoin functions without any, we always say Bitcoin is money with rules, not rulers. And then the most important piece, though, and why I think Bitcoin in the long term will win out as the form of money that most of the world will likely choose over gold, is that the supply of Bitcoin can't respond to the price. Mm-hmm. So if the price of gold were to go up to like $15,000 an ounce, it wouldn't respond overnight, but you would have a whole bunch of new gold mines that are viable at $15,000 an ounce. And that would therefore lead to the production of more gold than you would find at the current prices. And so it's a lag. It takes some time to respond. And that's what I was saying, is that it is a very hard form of money. It's hard to produce, and we can guess how much can be produced. Mm-hmm. But with Bitcoin, it doesn't matter how much mining power comes online. It doesn't matter how much money or resources people throw at the problem of Bitcoin mining. We know exactly how many Bitcoins will be produced and when. Mm-hmm. And so that supply is even more predictable and even harder to change. And those are the ways that I think it beats gold. Where it falls down, and the thing that's really hard to replicate with gold is this like emotional connection. And you've obviously felt this, and I think most people who've held a piece of gold in their hand, you know what I mean? It's compelling. It's heavy. It's like just shiny and amazing, and you can feel why this has been money. You can feel why this has been desirable for pretty much all of human history. Mm-hmm. And there's nothing like that with Bitcoin. There's nothing tangible. There's no connection. And really what you're getting with Bitcoin is just a consensus. We're just using it. We're just using a shared database. Mm-hmm. And that's not nearly as sexy as all the amazing things that you can do with gold. And I think that emotional connection that people have to gold is a big part of why so many people have stuck with it. Mm-hmm.
I think this idea of, store of value versus medium of exchange is an interesting kind of topic that I want to get your take on as well. We talked about you using it for transactions, spending 120 Bitcoin for some office furniture, using it in the actual physical world. But it almost seems like there's this whole other subset of people that are getting into the space that almost look at it as more of a piece of art, something to be collected, not actually transacted with. So how do you kind of look at that? I don't know if it's a problem, but if Bitcoin is supposed to be a medium of exchange, how do we separate those two uses for it?
Yeah. You can't really separate them. because they're both required. Like one is required for the other. The most important element of money is the ability to store value. If it doesn't store value, it's not money at all. Mm-hmm. And you can't store value without the potential promise of future exchange. So the only way that I am going to ascribe value in my mind to something is if I believe that someone else will give me value back for it in the future. And so in order to maintain its ability to store value, it has to be at least good enough as a medium of exchange. Mm-hmm. And that's what we've seen for most of the history of Bitcoin, is that, it's not that great in a lot of ways as a medium of exchange, but it's certainly good enough to maintain its ability to store value better than anything else. And that's kind of where we're at right now. Mm-hmm. What you're describing is the people that are just using it as a savings tool. And I think that's the most rational way to use Bitcoin right now. It's just as a savings tool. But there is a big movement that's kind of going on relating to the shift towards a medium of exchange. And so, when you go and you pay for your coffee or whatever, you tap your phone, like that's a great experience in terms of medium of exchange, mm-hmm. right? And it's hard for Bitcoin to outcompete that on that experience because it's already great. You don't really need it to be better. The areas where Bitcoin can be a better medium of exchange is when you start dealing with potential censorship and the need for anyone else's permission to use your money. So more and more people have probably experienced this thing over the last 10 or so years where, if you try and get some cash out of the bank, like even an amount that you have in there and that is well below any thresholds for money laundering, reporting, or anything like that. If you go into the bank and you ask them for $6,000 cash, they're going to say no. And being confronted with that, the fact that you don't actually have access to the money that you believe that you own, what you actually have is an IOU from the bank that says we promise to fulfill this, and maybe they will or maybe they won't, but they're certainly going to do it on their terms. So there is an angle where people are starting to realize, maybe I don't want the government or the banks to have the final say over how I spend my money. And we saw that with the trucker convoy and the donations, all the frozen bank accounts. That's a pretty obvious angle, I think, wherein Bitcoin is superior because, again, we're back to money with rules, not rulers. We don't need anyone's permission to send a transaction on Bitcoin. Bitcoin is making big strides in those areas, and it's starting to make strides in the sort of grassroots spending communities that are popping up around the world. So we've got our Saturday markets that we put on in Calgary. They're kind of like a little flea market, farmers market type thing where we've got a bunch of vendors that come and they all take Bitcoin. We've got a bunch of different ranchers and whatnot. And we kind of set this up because we wanted a way to spend our Bitcoin locally. Mm-hmm. There's and when it comes down to it, there's a not too far-fetched potential future where the federal government says you're not allowed to buy more than X amount of beef. And so I don't want to buy less beef. And so part of the motivation behind this was to create this circular economy where, we know the ranchers and we can pay them in a form of money that the government has no say over. Mm-hmm. And so I think we're just getting into that transition to them being a medium of exchange. And it's probably going to take a while because in the case of a regular transaction, like the coffee transaction doesn't need a trustless, uncensorable transaction, mm-hmm. right? Like I am perfectly willing to trust everyone in the value chain with that coffee transaction, from the coffee shop to the merchant provider to their bank to my bank, and it's fine. Whereas if you want to send a political donation and your political donation is going to anyone but the ruling party, I don't know if you want to be putting that on your credit card. I think that's the kind of thing that very quickly, the way our country and our world is going is going to be dangerous. Mm-hmm. And so I think we're getting there, but it's all built on that premise of the store of value first.
So Dave, when we saw that trucker protest, they had said that they froze some of those Bitcoin wallets and stuff like that. How did that end up shaking out or do you know how that ended up shaking out, and what jurisdiction or power do these governments have to actually be able to seize some of those assets?
Yeah. So there's a few things that they did. They issued a pretty hilarious demand to a bunch of companies in the space, including Bull Bitcoin, saying we demand that you freeze the following addresses. And it's well, that's not how that works. So no one, the government, the company that sold the Bitcoin can freeze a Bitcoin address. What they can do is if someone is holding Bitcoin on your behalf, they can legally compel that person to hand over the Bitcoin. And so there were some trucker donations that were collected by a small group of guys in the space, and there was a local guy on the ground in Ottawa who had the Bitcoins in his wallet. I think most of them were handed out to the truckers. They were converted to cash and handed out, but some of them were in his wallet and were seized by the feds. And they basically came in there and, he had the choice to give them the keys or not, and he gave them the keys to stay out of jail, I guess. And so in that sense, we're all vulnerable to the violence of the state. They can come into your house and threaten to lock you up. Part of the benefit of Bitcoin versus gold is that, like I mentioned, it offers, I would say, a superior form of property rights. You got, a large amount of money stored in gold. It's going to be tough to hide, right? Whereas if you have a large amount of money stored in Bitcoin, there's no way for them to conclusively even know that you have that, right? You can hide it in a million different ways digitally, and their ability to rob you is only as good as their information about what they can steal. And so I think that gets back to a pretty important lesson, is what we were sort of talking about there, is not your keys, not your coins, what we always say in the Bitcoin industry. So the reason that the customers of Bull Bitcoin were not able to have their accounts frozen is because Bull Bitcoin doesn't ever hold anyone's coins. That's the same thing for Bitcoin Well that we mentioned that I'm on the board of. We've prioritized setting up systems wherein we can't lose or steal the coins. We can't turn them over to the government. We don't have the ability to affect those coins, because when somebody buys Bitcoin, they get paid the Bitcoin immediately into their own custody. And that's really about half the benefit of Bitcoin, is being able to take your assets and your money into your own custody. And so that's another thing that's kind of important in the world we've seen lately, is we've seen this explosion of the ETFs, which are a very easy way to put some Bitcoin price exposure into your retirement accounts or your TFSA, and can definitely be beneficial in that, the long-term price exposure to Bitcoin is probably a good thing, but someone else has those Bitcoins. And every single one of those Bitcoin ETFs has their Bitcoins custodied in the state of New York. And, we've seen some of the Justice Department's sort of insanity in the state of New York over the last couple of years. And New York has their own sort of cryptocurrency licensing regime that's very draconian, I would say. And so if you hold money in a Bitcoin ETF, you're holding that value in the state of New York, subject to the laws of the state of New York, and all of that insanity that you might have your Bitcoins stolen or seized, and that might have nothing to do with you. It might have to do with the internal politics and or who's in power.
Right. Yeah. Something that we talk about quite a bit on the show is counterparty risk. That idea that if you're exposed to somebody else holding any one of your assets is really important, whether that be in the cryptocurrency space or in the gold space. But I want to go back to that Saturday market. I had a discussion with you a couple of weeks ago about it, and I think that's such a cool thing to be able to put those relationships into practice before we really need the ability to, buy more beef, as you said, if that is going to end up being against the rules, or if you do, happen to cross any party line that makes you an enemy in any particular way. But I wanted to move on to talking a little bit about the mining. With Bitcoin, obviously you have a lot of experience with that, but let's talk about some of, let's say, the excess uses of energy for Bitcoin miners and how they can be used on a grid to balance the grid a little bit more.
Yeah. It's a common critique of Bitcoin that it uses too much power. And we see these they always love to do headlines that's like, oh, Bitcoin uses as much power as Denmark, right? But nobody has really addressed what a colossal waste of power Denmark is. And so obviously to the people of Denmark, it's probably doesn't seem like a waste of power, right? Mm-hmm. But there's almost no benefit to me for Denmark to exist. And that's true for almost everything in the world, right? Mm-hmm. The power that other people use is wasted from my perspective. And so the critiques of wasted power are nonsense. If the person who paid for the power used it as intended, then it's not wasted. So it's possible to end the discussion about Bitcoin and energy uses at that. But the reality is that, quite contrary to the way that it's presented, wherein there is all of this power that's wasted, Bitcoin can actually serve as kind of like a backstop to the grid. And so the reason for that is you can basically put a Bitcoin mine anywhere in the world, and the Bitcoin miners will buy power at a minimum rate. They won't pay a lot for the power, but they'll pay more than zero. And right now, globally, something like 30% of all the world's generated power gets wasted. This gets channeled into the ground because we don't have a use for it. Mm-hmm. And in a lot of cases, that's because it is in a very remote location. It's generated in a place that isn't economical to get it to market. And the Bitcoin miners can buy that. And so what that means is that every single power production project that comes up worldwide from now on has a potential buyer of last resort. And this is true for everything from renewables to fossil fuels to nuclear. You can put a Bitcoin mine there, and you can sell a certain percentage of your power. And so what that allows is the creation of excess. And the way that our grid works, we obviously use a lot more power at certain times of the day. And so we need enough capacity to generate not only what we think we're going to need at peak hours, we need some buffer with that, right? Mm-hmm. And so because we can now monetize the entirety of our power generation at least a minimum level, that makes it economically viable to keep a lot more power generation online or nearly online. And so you see some things like we've seen this in Texas in a pretty interesting way where Bitcoin miners who are really right in the heart of the power generation facilities have signed long-term power purchase agreements, and they basically bought power futures, and they're buying this energy at a fairly low fixed cost. And when there is a significant demand event on the grid, and we saw that a few months ago in Texas when there was the big storms, the Bitcoin miner can actually choose to sell that power back to the grid. They can shut down the mining operation, and at a certain point, it's more economical for the miner to sell the power back to the grid than mine the Bitcoins. Mm-hmm. And so in that way, Bitcoin miners support this massive pool of demand response electricity generation that could just be plugged back into the grid whenever it's needed. Mm-hmm. So it the short answer is cry harder. It doesn't matter. Everything uses energy. And the long answer is it actually makes things better.
Well, it's not like they're storing energy to sell back to the grid, but they can just shut it off, to shut off their predetermined demand to give that back to the grid, right?
Yeah, absolutely.
Mm-hmm. Yeah, I like the way you put that, to, let's say, make use of the excess.
Yeah.
So how do you guys go about understanding the depreciation of the miners and the usefulness and lifespan of that technology? And how does that factor into, the expenses of running that business over time?
Well, I'm not an expert in this area. I'm not actively in the mining business. I do a little bit of consulting with some mining companies, but Bitcoin miners have been commoditized, and that's really important. They go up and down in value with Bitcoin, and so managing the value of your mining inventory is one of the most important things for any Bitcoin miner. And you can see a lot of the large, big public miners actually kind of shot themselves in the foot because they bought so much inventory of very expensive miners at a time when the market was really at a peak. And if you buy a $20,000 miner and it makes you $3,000, and then now it's worth $2,000, you didn't make a good choice, right? You should have just waited until it was $2,000. And there's a scenario like that going on with a lot of these big public miners, and that's one of the best things to evaluate when looking at those stocks. I think is has this company made good choices with when they purchased their miners? Mm-hmm. And so it is super important. But some of the most expensive or most successful Bitcoin miners that I've seen have been really smallish to medium-sized operations where everything is jerry-rigged, and they're using the oldest possible miners, and they've done everything that they can to keep all of their costs as low as possible, basically.
Mm-hmm. Instead of just trying to expand too fast and take on too much capital-intensive equipment.
Yeah, exactly.
Mm-hmm. So, Dave, where do you see the future of Bitcoin going? Does it need to be adopted as legal tender by more countries? Does it need to, head in a more decentralized direction? What do you think would be best for it? Maybe even being used as another currency for a company like Visa to accept.
Yeah, I think a lot of those things will happen. We've got El Salvador where it's legal tender already, but I don't think that's helpful. I don't think that's meaningful at all. Really, it's legal tender is just the permission to use it as money, right? And that's kind of the whole point, is that we don't need the government's permission. So getting their permission is more or less irrelevant. I do think that more and more countries will start adopting it in a bunch of different ways, and we're in a spot now where a huge percentage of the world's currencies are kind of off the cliff. You know what I mean? Everyone's been printing so hard; it's kind of like a race to zero. Mm-hmm. And we've seen some countries like Zimbabwe and Venezuela already fall into sort of hyperinflation hell, and the whole country goes to shit. And at the same time, we've seen some other countries that are just on the brink of that. Lebanon, Argentina, different places around the world where that inflation is really close to spiraling out of control. And I like the analogy of Wile E. Coyote, where you'd be chasing the Roadrunner mm-hmm. out over the cliff, and there's a moment where he runs out over the cliff, and then he pauses in midair because he hasn't yet realized that he should be subject to the forces of gravity. And he just pauses there, and then he falls. And I think there are a lot of countries in the world that are right at that spot. There's pause, and they're on the brink of falling. And when a country loses its ability to really manage its money, that's what we're talking about here. These countries have been printing money to spend money. In other words, they've been essentially using their monetary policy to make up for the gaps in their fiscal policy. And that's been a very useful tool, especially for politicians seeking their next election win. And whether they like it or not, that Wile E. Coyote is going to start to fall at some point. So more and more countries are permanently losing that tool as a way to make up for their mismanagement of the resources. And when that happens, they have a few choices. They can try to do a revaluation the way that Argentina has done a couple times, but that can only work so many times. The other choices would be to switch to a currency that is backed by something, or switch to another regional currency. And I think that last one, switching to a regional currency, is what we're going to see quite a bit of. When Venezuela went down, there was a point where you basically had to spend any bolivars that you got that day, or they're going to be worth half as much the next day. And so everyone was getting out of them as fast as possible. And in order for commerce to continue in the country, they adopted a couple different kinds of money, mainly the physical US dollar. That was limited by how many are in the country, the fact that they can be easily seized. Some smart people took the next step and started to try to get some of the benefits of the digital economy, and they started trading iTunes gift cards. So that was a big form of money in Venezuela in like 2018, 2019. And then the next one was Bitcoin. And at that point, Bitcoin was kind of a distant third as the choice of what money people might use. But almost everyone who picked Bitcoin doesn't live in Venezuela anymore. So it rewarded the people who picked the better form of money. And that same game of choices is going to play out at the national level, I think. And at a certain point, my prediction would be that like 10 years from now, maybe even 5 years from now, but certainly 10 years from now, we're going to see maybe 6 or 7 currencies left in the world. And most of the small currencies will have collapsed, and they will have gone to whatever's close. They will have gone to the US dollar, the yuan, or whatnot. But some countries will choose a different path, and some countries will go back to a gold standard, and some countries will go to a Bitcoin standard. And I think those countries that end up going to the Bitcoin standard, which I would describe that as issuing bills on top of Bitcoin. So very much in the same way that gold was once collateralized and turned into an IOU that became the money, they can do the same thing with Bitcoin. But the difference is it's very easy to check how much Bitcoin they have. So,
but doesn't that end up leading to really the same place where, this corruption of the original form of money by fiat and debasing the fiat currency? Doesn't that really, in a lot of ways negate the value of the Bitcoin in the first place, just as it has been with gold every time that fiat has been issued on top of gold?
Yeah, so it does, and it certainly opens the door to that. But there's a couple of advantages that make it less likely with Bitcoin, I think. And the first is that ability to verify it, right? So we've got these ETFs, right? And there are very similar ETFs with gold, right? The paper gold, and it's a pretty widely held opinion that the gold is not there, right? The gold that's supposed to be in Fort Knox is actually in India in the form of jewelry, and Fort Knox now holds IOUs from gold dealers. And
or it is there and it is leased out, right?
Yeah, exactly. So the gold has been rehypothecated more than once, and it's possible to do that with Bitcoin, but it's a lot easier to catch them if they do that. The other flip side to that is that a form of paper currency or digital fiat issued on top of Bitcoin can only be as good as its ability to be redeemed back into Bitcoin. And so, you see these, like the US holding Germany's gold, and Germany's like, hey, can we have our gold back? And I don't remember the numbers, but like some ridiculous, like they're like, you can have 10% back by 2035, And part of the reason that they give for that is that it's very difficult to move gold. Obviously, that's an absurd number stems from the fact that the gold's not there. But with Bitcoin, there's no such excuse, right? Any form of IOU built on top of Bitcoin needs to be instantly redeemable for Bitcoin, or it will lose all of its value almost immediately. There are actually a few different technologies that form something kind of like that on top of Bitcoin. So there's something called the Liquid Network, for example, it's a federation that issues essentially its own token representing Bitcoin on top of Bitcoin. And the benefit to that is that it can transact much more quickly than Bitcoin. And it's not nearly as trustless as Bitcoin, but it's more trustless than trusting one person or one company to hold your Bitcoin. And so you used the idea earlier of like Visa adopting Bitcoin. And I think that will happen. When people have a Bitcoin transaction go through, from a credit card account, which I think will happen eventually, to a merchant processor, to the merchant in Bitcoin, that doesn't necessarily have to happen on the Bitcoin network in the future. That might all happen inside Visa's servers. And that will be a form of fiat issued by Visa on top of Bitcoin. But we'll only trust it for long if we can get the actual Bitcoin out real fast. And so that's sort of where I see the hope that like paper Bitcoin will be harder to debase the total market of Bitcoin, I guess.
because of the, the ability to actually see what's happening there.
Yeah, because you can see it and you can redeem it.
Mm-hmm. Interesting. Excellent, Dave. Well, that's, all the questions I have for you today. I think that was an excellent kind of run through of how these worlds intersect and, what some of the advantages and disadvantages are. And I really want to thank you for coming on to explain a lot of that to us. Tell us, any of the events that you're working on and where more people can find you.
Yeah. So I have a whole bunch of stuff to shill. The first one would be the Bitcoin Rodeo.
Mm-hmm.
That's a conference that we put on here in Calgary. It's happening on July 2nd and 3rd. We've also got one of our Saturday markets on Canada Day the day before. So it's a great time to get involved in the Bitcoin community. We have JP Sears headlining the conference. He's probably the most well-known guy that nobody knows his name. He's that comedian with the long red hair who's always making fun of the government.
Mm-hmm.
And we've got just an amazing group of speakers that are going to be talking all about Bitcoin. It's focused really on like how Bitcoin is important in the real world and what actually matters about how Bitcoin affects the world. We're not getting super technical. We're not getting really technical at all. And we're not going like very deep dive on the macroeconomic side of things, which is where a lot of Bitcoin content goes. We're really trying to talk to we're trying to talk to your audience. We're trying to talk to the people that have identified this problem and want to look at solutions, right? So we're hoping to get a lot of people that are currently not Bitcoiners, but are potential future Bitcoiners in. And I'm excited about that one. It's going to be a pretty great content lineup, I think. And other than that, like I mentioned, Bitcoin Well is a publicly traded company here in Canada. Ticker is BTCW. So I would recommend to everyone to have a look at that and do your own research. And bitcoinwell.com. If you're looking to buy Bitcoin, we have a network of ATMs around Canada as well as the website. And what am I missing? Other than that, you can find out more about my very prestigious and important title of the strongest and best looking Bitcoin entrepreneur in Canada on my website at bitcoinbrains.com.
Mm-hmm.
And
I'm also on Twitter at Bitcoin Brains.
Yeah, exactly. I'm pretty much at Bitcoin Brains on everything.
Yeah, perfect. Excellent, Dave. Really appreciate your time today.
Yeah, thanks for having me.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.